Hello traders, Jeff with OptionBoxer.com. Got another strategy for you to take a look at. Before we get into it, please know I'm not a registered financial advisor and this video is not a recommendation for you to buy or sell any security. Okay, so let's not waste a lot of time here. And basically this is a very short-term strategy utilizing the SPY ETF TLT, which is the bond ETF, and then the gold ETF. And basically what I'm going to do, and the way I've kind of been setting it up, is I'm going to buy a vertical. So it's a very, very limited risk play. And probably want to make that $1 wide, very limited risk, and certainly a defined risk strategy you could use. And basically you're playing off these three, kind of major ETFs and hoping that one of them makes a relatively significant move in the next 11 days. And that's basically the way we're going to play it. So we're going to take a look at TLT. So basically the way I'm trying to set this up, and what seems to have been working for me, is when I trade the SPY, I trade right at the money. When I trade the TLT and GLD ETFs, I go one position out of the money, one spot lower, and we'll see how that holds up over the course of the next couple of minutes. And I've been trading them $1 wide. You can do 50 cents wide if you want to, mitigate your risk even further, but you're only risking, let's see, 81, 91, 101, 108, $108 in this strategy to, if one of these does make a nice move by $1 or $2 higher, you can see expected move in the next 11 days. We're looking at $2.49. Well, if that moves $2.49 to the upside, we're gonna look good. And the reason I have GLD and TLT pulled up is because those are kind of non-correlated assets, and so if SPY decides it wants to move lower, well, of course that's going to hurt this position. But if either of these two, and the reason I've done two of them, not just one of them, is I want to increase the chances that I have for success as much as I can. And I'm sure you could find a number of different ETFs that are non-correlated, or you could find ETFs like the diamonds or the Qs that are correlated, and trade it another way, kind of adapt the strategy to your liking. But regardless, I'm using the non-correlated GLD and TLT ETFs, and we're basically just looking for one of these to pop. So we had a little bit of a move here in TLT and kind of negated some of our losses there. And really what I'm looking for is one of them to pop significantly. Now understand that you are risking the initial investment here, so at any point you see a profit you like, you can take it off the board. So at that point, I'd say that's probably a profit that I could be happy with. If I did want to risk one more day, in this case I was I think maybe slightly rewarded. We lost a large value of our SPY position here, and if one of these ever goes to a full loss, there's no reason to close it. You might as well just leave it on and hope that something happens. No guarantees, but it's certainly something to consider. So since we are at a maximum loss there, we'll just play this out to the end and see if any of that value comes back. And it did not. But had we held it all the way to the very end, we would have been rewarded on both the GLD and the TLT side. So let's try this one more time. We've looked at it here in 2016. Let's skip ahead maybe to 2018. Let's look at it on February 5th and see if this strategy still holds, as a possible play for us. So you can see here we can't trade this because that's clearly not accurate. Those spreads wouldn't exist in the SPY ETF. So that's a little more realistic, still a little wider than you're actually going to see there, but we can at least make this work for us. So you want to go to about 10, 11 days, 9, 10, 11, and see how it holds up. So 265, 266, 50. There we go. So 57 TLT doing the same thing, one spot out of the money. Bid-ask spreads again, really crazy there. That's not realistic, in the market that I've been looking at. So you're paying a little bit heavier premium there on the TLT side, maybe a little bit of volatility in the market there. 26, 27, and more in line with what we're expecting here. You can see our profit and loss graph. It does go up to a nice profit here, And again, you're just looking for one of these to kind of break out. And as soon as you get that breakout, you know, that may be enough to justify the trade for you. I mean, for me, it's probably not. And probably on 2-14, that would be, you know, a reason to think about getting out. We had this strong move in the, what am I looking at here? The GLD. And so, of course, we were able to make some money there. And it popped up. It's more than 100% here. We had the SPY work in our favor a little bit as well. And TLT, you know, kind of went the other direction on us. But still, we've got a 40, let's call that 20, $64 in profit, or 64 minus 20, so 40 something dollars in profit in just a couple of days. We got into it on the 12th, and it's only the 14th. You know, you could leave this TLT position on and see what happens with it. Unfortunately, it doesn't look like it's going to end up coming back, just based on the profit and loss graph. You could extrapolate this out a number of days. You would have been rewarded if you kept it open one more day through SPY. But remember, you have all of this at risk, and you really don't have a hedge against any one of these. Remember, on these long vertical spreads, you know, if they don't finish in the money, they're going to expire worthless. And so that's something you got to keep in mind as you trade this strategy. But that's it for this video. If you have any questions, feel free to reach me at optionboxer.com. Thanks for watching.